Homebuyers are being warned to brace for higher mortgage repayments and quite possibly as early as June, as the Reserve Bank is poised to lift interest rates above 2%, quite possibly within a year. A rapid rise in inflation could prompt the earlier than expected increase. So joining me live now is the Executive Chairman of Yellow Brick Road Home Loans, Mark Bouris, to get his thoughts. Mark, good morning to you. So is it going to happen that soon? And what sort of an effect would that have?
Oh, well, if it's 2% and if it happens by June, that's devastating. So, I mean, let's just get it into perspective. The Reserve Bank is the organisation which calls the shots on interest rates. So it's not CBA, it's not Westpac, it's not ANZ, it's not NAB, it's nobody else. It's no commentator in the newspaper, it's none of them. It's not Domain, it's nobody. It's the Reserve Bank of Australia. And the Reserve Bank of Australia has made something very clear. They said, yes, we will probably put interest rates up in 2023. We've got this massive division between the markets, who are trying to force an interest rate up, including the banks, and the Reserve Bank is trying to keep interest rates on hold until sometime next year. For me, I'll be back in the Reserve Bank. But the point is, rates will go up. The next point is, to your quick point, how much by? Is it going to be by 2%? Well, 200 basis points is nearly double the current interest rate. There's no way in the world this economy can handle a 200 basis point increase in interest rates. So the Reserve Bank's not going to do that, because if they do that, then in 6 months they're going to have to start dropping rates. That doesn't make sense.
So the banks are trying to dictate the play here.
It's in the bank's interest, and by the way, for me, for that matter, for my business too, it's in my interest too for interest rates to go up, because we've been lending money to consumers during the COVID period on very, very low rates, very low fixed rates and very low variable rates. And what has happened here is that our margins have all been squeezed. So anyone who bothers to read the report on the bank's numbers sees that their margins have been reduced. The only way margins can get expanded, in other words, we make more profit per loan, is when interest rates rise, that we start to move out of cycle, all of us. So if the Reserve Bank puts them by 25, everybody goes 26 or 27, or someone stays back, but they go up on the next rate rise. So it's in our interest to have a rate rise sequence and a period of rate rises, and the quicker the better for all of us. If I put my Yellow Brick Road hat on, the quicker the better for all of us, because we're going to start making more money. So you've got to ask yourself the question, you know, in every race is a horse called self-interest, and we're going to whip the hell out of that. But equally, the Reserve Bank's in control. They know this. They know this narrative. They understand it really well. They made it pretty clear. The Reserve Bank governor a month ago came down heavy on all the markets and all the pundits and all the commentators, saying, listen, we're in control. We're not going to be told what to do. It's very interesting to watch this. Point is, there will be rate rises. Question is when and by how much. And there's no way there's going to be 200 basis points. That's 2%. Ridiculous.
Okay, that's very interesting, Mark Bouris. And just one more here. So in your heart of hearts, if the CBA says that the first rise may well come in June, not very far away, do you think that there will be, or are you more inclined to go with the RBA that it's still probably more towards 2023?
I'm saying, if you ask me the date, pick a date, I'm going to say the November board meeting of the Reserve Bank, which always falls on Melbourne Cup Day.
Yep.
That will be the day that we see the rate rise, and that has been a tradition from the Reserve Bank for rate reductions and rate rises for many years. When it's been a hiatus period like we've had, that is the day that they've made a move. And I think if it's going to happen, it's going to either happen in February next year or it's going to happen November this year. I don't think it's going to be June.
Okay. Great chat, Mark Bouris. Thanks for that. Thanks for explaining all of that, as always. Break it all down for us. Mark Bouris there. Appreciate it.